Bitcoin, a term that has revolutionized the financial landscape. Introduced in 2009 by the enigmatic figure Satoshi Nakamoto, Bitcoin emerged as the world's first decentralized digital currency. It promised a peer-to-peer system free from the control of traditional financial institutions. Bitcoin's inception marked the beginning of a new era, challenging the very foundations of our financial systems. It offered an alternative to conventional banking, with transactions verified by network nodes through cryptography and recorded on a public ledger called a blockchain. In the years following its creation, Bitcoin's influence has grown exponentially. It has not only paved the way for thousands of other cryptocurrencies, but has also sparked a global conversation about the future of money. As we delve deeper into the world of Bitcoin, we uncover a financial revolution that is reshaping how we think about value, trust, and freedom. Let's explore this fascinating journey together, starting with understanding what Bitcoin truly is and why it matters in today's world. Bitcoin has captured the world's attention. Its decentralized nature and potential for financial freedom are alluring. Yet, Bitcoin's price volatility is well known. This volatility presents opportunities and risks for traders. Understanding market dynamics is crucial for success. Enter the Bitcoin Liquidation Heatmap, a powerful tool for traders. This visual representation displays the amount of Bitcoin liquidated or forcibly closed out of positions at various price levels. Typically depicted using a color spectrum, the heat map highlights areas of high and low liquidation activity. Traders utilize liquidation heat maps to anticipate significant price movements. Large clusters of liquidations at a specific price level can signal a potential cascade. If the price approaches this level, a wave of forced selling might occur. This selling pressure can push the price further in that direction, creating a self-fulfilling prophecy. Section 4. A case in point, when liquidations fueled the fire. Remember the flash crash of 2017? Liquidation heat maps lit up like fireworks that day. As the price tumbled, it triggered a cascade of stop-loss orders and forced liquidations, exacerbating the downward spiral. This event highlighted the power of liquidation heat maps in understanding market sentiment and potential price vulnerabilities. Section 5. The bigger picture. Heat maps as part of a holistic strategy. While liquidation heat maps offer valuable insights, they are not a crystal ball. Traders should use them in conjunction with other indicators and risk management strategies. Technical analysis, fundamental analysis, and market sentiment should all play a role. Liquidation heat maps are a powerful tool for understanding Bitcoin's volatile landscape. By providing a glimpse into the forces driving market movements, they empower traders to make more informed decisions. Remember, knowledge is power in the world of Bitcoin. Gap 3S. As we look ahead, the future of Bitcoin remains uncertain yet promising. Innovations in blockchain technology and increasing adoption by mainstream institutions could propel Bitcoin to new heights. However, regulatory challenges and market volatility continue to pose risks. Understanding these dynamics is crucial for anyone looking to navigate the world of Bitcoin. Imagine a world where Bitcoin is not just a speculative asset, but an integral part of our financial ecosystem. Major corporations might start using Bitcoin for transactions, and governments could explore digital currencies, inspired by Bitcoin's decentralized nature. This evolution could redefine how we perceive and use money, but with great potential comes great responsibility. Investors and traders must stay informed and adapt to changing landscapes. As technology advances, so does the complexity of the market. Tools like liquidation heat maps, in conjunction with comprehensive strategies, can help navigate these uncharted waters. In this ever-evolving space, one thing is certain: Bitcoin will continue to challenge our understanding of finance, pushing boundaries and opening new possibilities. The journey ahead is both thrilling and fraught with challenges, but with the right knowledge and tools, the future of Bitcoin looks bright. Gap 3S. Bitcoin's impact on the global economy cannot be overstated. From influencing monetary policies to providing financial inclusion in underbanked regions, Bitcoin is reshaping the economic landscape. Its decentralized nature challenges traditional financial systems, offering a new paradigm for value exchange. As countries grapple with economic instability, Bitcoin provides an alternative that is immune to government interference and inflation. In regions where traditional banking is inaccessible, Bitcoin opens doors to financial services, enabling people to save, invest, and transact without the need for a central authority. The adoption of Bitcoin by major corporations and financial institutions signals a shift towards a more inclusive and decentralized financial system. As more entities recognize Bitcoin's potential, its integration into the global economy will likely accelerate, driving innovation and economic growth. However, this transformation is not without its hurdles. Regulatory scrutiny and the need for robust security measures are critical challenges that must be addressed. Yet, the potential benefits of a Bitcoin-driven economy are vast, promising a future where financial power is more equitably distributed. In conclusion, Bitcoin stands at the forefront of a financial revolution, poised to redefine the global economic landscape. The journey will be complex, but the possibilities are limitless. As we move forward, Bitcoin's role in the global economy will undoubtedly expand, heralding a new era of financial inclusivity and innovation. Gap 3S. Investing in Bitcoin comes with its own set of risks and rewards. While the potential for high returns is alluring, the volatility and regulatory uncertainties can lead to significant losses. It's essential for investors to conduct thorough research and employ sound risk management strategies. Bitcoin's price can surge to unprecedented heights, making early adopters wealthy overnight. However, the same volatility that drives these gains can also lead to dramatic downturns, wiping out investments in a matter of hours. This duality makes Bitcoin both a high-risk and high-reward asset. Moreover, the regulatory landscape for Bitcoin is still evolving. Governments around the world are grappling with how to manage and control this decentralized currency. Changes in regulations can have a profound impact on Bitcoin's value and its accessibility, adding another layer of risk for investors. Security is another crucial aspect to consider. While Bitcoin itself is secure, the platforms used to trade and store it are not immune to hacking and fraud. Investors must take precautions to protect their assets, including using secure wallets and enabling two-factor authentication. Despite these risks, the rewards can be substantial. Bitcoin offers a level of financial freedom and potential for growth that is unparalleled in traditional markets. For those willing to navigate its complexities and uncertainties, Bitcoin investment can be a lucrative addition to a diversified portfolio. In conclusion, Bitcoin investment is not for the faint-hearted. It requires a keen understanding of the market, a tolerance for risk, and a commitment to ongoing education. As with any investment, the key to success lies in balancing the potential rewards with the inherent risks. Gap 3S. Bitcoin has permeated popular culture, appearing in movies, TV shows, and even music. Its portrayal ranges from a revolutionary financial tool to a speculative bubble. This cultural presence reflects Bitcoin's growing influence and the public's fascination with its potential. Gap 2S. One of the earliest mentions of Bitcoin in mainstream media was in the TV show The Good Wife, where an episode explored the legal and ethical implications of this new digital currency. The show highlighted both the promise and the pitfalls of Bitcoin, sparking curiosity among viewers. Gap 2S. In the movie Dope, Bitcoin played a pivotal role in the plot, showcasing how the younger generation is embracing digital currencies. This film brought Bitcoin into the spotlight, emphasizing its utility and appeal in a tech-savvy world. Gap 2S. Music artists have also jumped on the Bitcoin bandwagon. Rapper 50 Cent famously accepted Bitcoin as payment for his album Animal Ambition, later discovering that the value of his Bitcoin holdings had soared. This move not only demonstrated Bitcoin's potential for growth, but also its integration into everyday transactions. Gap 2S. Even animated shows like The Simpsons have featured Bitcoin, using humor to explain complex concepts related to blockchain technology and digital currencies. These portrayals help demystify Bitcoin, making it more accessible to the general public. Gap 2S. As Bitcoin continues to gain traction, its representation in popular culture will likely expand, further embedding it in the collective consciousness. Whether viewed as a groundbreaking innovation or a risky gamble, Bitcoin's presence in media underscores its significance in the modern financial landscape. Gap 3S. Understanding the technical aspects of Bitcoin is crucial for anyone looking to delve deeper into the cryptocurrency world. From mining to blockchain technology, the technical foundation of Bitcoin is what makes it secure and decentralized. This chapter will explore these technicalities in detail. Gap 2S. At its core, Bitcoin operates on a decentralized ledger known as the blockchain. This ledger records every transaction ever made, ensuring transparency and security. Each block in the chain contains a list of transactions, and once a block is filled, it is added to the chain in a linear, chronological order. Gap 2S. Mining is another fundamental aspect of Bitcoin. Miners use powerful computers to solve complex mathematical puzzles, which validate transactions and add them to the blockchain. This process is resource-intensive, requiring significant computational power and energy. Miners are rewarded with new Bitcoins for their efforts, incentivizing the maintenance of the network. Gap 2S. The security of Bitcoin is bolstered by cryptographic techniques. Public and private keys are used to secure transactions, ensuring that only the rightful owner can access and transfer their Bitcoins. This cryptographic security makes Bitcoin resistant to fraud and hacking attempts. Gap 2S. Another key technical feature is the concept of decentralization. Unlike traditional currencies that are controlled by central banks, Bitcoin operates on a peer-to-peer network. This means that no single entity has control over the entire network, making it resistant to censorship and manipulation. Gap 2S. Understanding these technical elements provides a deeper appreciation of what makes Bitcoin unique. It's not just a digital currency, it's a revolutionary technology that has the potential to reshape the financial landscape. As we move forward, grasping these technicalities will be essential for anyone looking to fully engage with the world of cryptocurrencies. Gap 3S. The environmental impact of Bitcoin mining has been a topic of intense debate. The energy consumption required for mining operations is significant, leading to concerns about its sustainability. This chapter will examine the environmental implications of Bitcoin and potential solutions to mitigate its impact. Gap 2S. Bitcoin mining consumes vast amounts of electricity, often compared to the energy usage of entire countries. This high energy demand is primarily due to the proof-of-work algorithm, which requires miners to solve complex mathematical problems to validate transactions. Gap 2S. This energy consumption has drawn criticism from environmentalists who argue that Bitcoin's carbon footprint is too large for it to be considered a sustainable technology. The majority of Bitcoin mining is powered by non-renewable energy sources, further exacerbating its environmental impact. Gap 2S. However, there are potential solutions on the horizon. Some mining operations are turning to renewable energy sources, such as hydroelectric, solar, and wind power, to reduce their carbon footprint. Additionally, there are ongoing discussions about transitioning Bitcoin to a more energy-efficient consensus mechanism, such as proof of stake. Gap 2S. Another innovative approach is the use of excess energy from other industries. For example, some miners utilize flared natural gas from oil extraction operations, turning a waste product into a valuable resource. Gap 2S. While these efforts are promising, the environmental impact of Bitcoin remains a significant challenge. As the cryptocurrency continues to grow, finding sustainable solutions will be crucial for its long-term viability. Gap 2S. In conclusion, the environmental concerns surrounding Bitcoin are complex and multifaceted. By exploring alternative energy sources and more efficient technologies, the cryptocurrency community can work towards a more sustainable future. Understanding these challenges and potential solutions is essential for anyone invested in the future of Bitcoin.